The US dollar and bond yields jumped this week as Fed Chairman Powell said he was increasingly upbeat about the US economy. The first semi-annual congressional testimony by new Fed Chairman Jay Powell dominated markets this week. He said that the economic boost from the tax cuts passed into law in December was likely to be larger than he had expected in December. So in the March forecasts, he is likely to raise his forecast for US GDP growth. Powell was also more upbeat on the inflation outlook. He didn't tip his hand in terms of how many interest rate rises he expects this year, but market interest rates rose in response. Markets now fully price 3 rate hikes this year and further tightening in 2019. The week's US economic data mostly supported this upbeat narrative. It included February readings on consumer confidence at a high since 2000 and manufacturing sentiment reaching a high since 2004. Backed by higher interest rates, the US dollar rose against all major currencies after Powell's testimony, with the exception of the Japanese yen. The yen has been very skittish as it anticipates next Friday's Bank of Japan policy meeting. The Australian dollar fell against the US dollar after Powell's testimony and then fell again in response to Australia's business investment report, falling to lows just above 77, its weakest point since December. While the survey of business investment intentions into 2019 was actually quite encouraging, the actual expenditure in the fourth quarter fell slightly, disappointing markets. This was enough for Westpac to slightly trim its forecast for fourth quarter GDP, which is due on Wednesday. Westpac is looking for a modest gain of 0.5% in the quarter, 2.5% over the year, with notable weakness in net exports. The GDP report is probably key for the Aussie dollar next week, but a very busy local calendar also includes the RBA meeting on Tuesday, with rates firmly on hold at 1.5%, a speech by RBA Governor Lowe on Wednesday, and January data on retail sales, the trade balance, and building approvals. Offshore, there will also be plenty to watch in the week ahead, including monetary policy decisions in the Eurozone, Canada, and Japan. We also see the US February employment report, and we'll certainly be keeping a close eye on US equity markets after stocks reacted very negatively to President Trump's announcement to impose tariffs on steel and aluminium imports. For the Aussie dollar, it has been finding some support from commodity prices, which have generally emerged from China's Lunar New Year holiday in a positive mood. However, if the US dollar continues to find support from the optimistic outlook for the US economy and Fed rate hikes, then we're likely to see lower trading ranges on the Aussie dollar. We would expect that in the week ahead, if this is the case, then the trading ranges will move to about 76 to 77.50 against the US. We'll speak to you next week.